Welcome to the Transparent FX Academy. I'm Nick and I'm a top author training you with over 190k reputation points. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, there are two important levels that we have to pay attention to. The first one is this quite important previous monthly level of demand and support, from which all these rejections to the upside were created. Now, from here, every single time the market tested its zone, it rejected it to the upside quite aggressively. And what we can notice is that at the moment, we are getting the exact same rejection to the upside. Now, the market has now reached also the previous monthly support turn resistance, which is this level here, which is the second important zone, because what we know is that from here, all this previous rejection to the upside was created. The market then broke below that zone, so that previous support is now turned resistance here. So the market is actually trapped here in between previous support and resistance and a previous support, which is currently still acting as support. So we have two important levels of structure. Dropping down on the weekly time frame, what we can notice is that these two levels appear even more clearly. We can notice how this is the previous support, and now the market is respecting it as support, turned resistance, obviously, and at the same time, we have this previous support still acting as support. So the market here on the weekly is clearly respecting these two levels, this one as resistance and this one as support. We can also notice how, as we have from a pattern standpoint in impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. This shows us how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of the previous area of weekly support, now turned resistance. Now, this creates confluence of resistance inside of the zone. And inside of a confluence of resistance area, there is an increased probability of seeing institutional shorting. And we will be speaking about institutional shorting in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, we can notice how the market has just rejected this level aggressively. Now, I did speak about USDJPY just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting this rejection to the downside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But for now, let's keep all of this in mind, and before we dig deeper into the technicals on the daily time frame, let's go and check out what is going on when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we look at the data for the JPY, what we can notice is that with the last reports, we have seen a huge increase of net positions. We went from 121.7k net positions all the way up to 176.8k net positions. So we had a huge increase of net positions, meaning that institutions are moving back to the bullish side of the JPY, so to the bearish side for USDJPY. Because keep in mind that all currencies on the spot are traded against the USD. So if institutions are longing the JPY, they're actually shorting USDJPY. So as institutions are shorting USDJPY aggressively with 204 longs on the JPY, so shorts on USDJPY, and only 27K shorts on the JPY, so longs on USDJPY, they are aggressively positioned to the bearish side for USDJPY. So institutions are currently shorting USDJPY, and that appears quite clearly if we look at the price action. So it comes as no surprise that USDJPY is currently in a downtrend. The problem here is that there is some structure. This level here on the daily is previous daily resistance from which these rejections to the downside were created, which is now turned support here. There is the possibility of still seeing bullish price action away from the support zone until the market will remain above it. However, if and only if the market breaks below that support, that is where things really get interesting, because a break below this support would make this previous support become resistance. So if we do see the break and retest, there is definitely the possibility to see more institutional shorting, further increasing the probability of seeing more bearish price action. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now back to the analysis. So if we do see this break and retest, what would I expect? Well, as usual, and as my students know very well, the monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. But trading is reactive and not predictive. So if the market would break and retest at that point, if the market would shift from an intraday bullish to a bearish market inside of this level with institutional shorting, at that point, I wouldn't be surprised to see a potential rejection to the downside below the area for the completion of this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.